Bitcoin continues to dominate headlines across the cryptocurrency world, standing as the undisputed leader in market influence, institutional adoption, and technological relevance. Despite ongoing price swings, shifts in investor sentiment, and global regulatory scrutiny, Bitcoin's role in shaping the digital asset economy remains stronger than ever. Today, we'll take a deep look at where Bitcoin stands, its price movements, institutional strategies, evolving regulations, and the broader cultural and technological forces driving its future. Price movements and market sentiment. Bitcoin has recently been experiencing a wave of volatility. Sudden drops in price have tested investor confidence, especially among retail traders who are often more sensitive to short-term fluctuations. For some newcomers, these dips have sparked caution and uncertainty. But underneath the surface, the broader story is far more optimistic. Large institutional holders, sometimes referred to as whales, have continued to accumulate Bitcoin even during these periods of weakness. Their strategy suggests that they view current price levels not as risk, but as opportunity. In fact, one major entity recently made headlines by acquiring over 3,000 Bitcoin, a move that represents approximately 3% of the total supply in circulation. This kind of aggressive accumulation highlights the belief that Bitcoin remains undervalued when viewed from a long-term perspective. Institutional players like BlackRock and ARK Invest have also made adjustments to their Bitcoin portfolios, reflecting the complex market sentiment surrounding the asset. Some firms have increased their exposure, while others have taken profits or reduced risk amid uncertainty. This push and pull between accumulation and adjustment mirrors the broader market, where optimism about Bitcoin's long-term trajectory is balanced by caution over short-term volatility. Analysts remain divided on where prices will go in the near term. Bearish indicators, such as weakening momentum and increased sell pressure on exchanges, suggest the possibility of corrections. On the other hand, bullish forecasters predict Bitcoin could appreciate by nearly 30% annually over the next 2 decades, a staggering outlook that underscores its role as a long-term store of value. This divergence of opinion reflects Bitcoin's unique place in the market, simultaneously volatile and yet remarkably resilient. Institutional adoption and regulatory environment. Beyond price charts, the institutional landscape for Bitcoin continues to expand. Exchange-traded funds tied to Bitcoin are now trading on major U.S. exchanges, opening the door for traditional investors to gain exposure to Bitcoin without directly holding the asset. These ETFs mark a historic shift, providing legitimacy and access to a new wave of participants, from pension funds to family offices. But with increased access comes greater oversight. Regulators worldwide are closely watching Bitcoin's growth, and their decisions continue to shape the market. In the United States, the Securities and Exchange Commission has repeatedly delayed rulings on certain Bitcoin ETF proposals. While frustrating for some investors, these delays are seen as a sign that regulators are carefully evaluating how to integrate Bitcoin into the broader financial system. Globally, Bitcoin is also shaping policy discussions. In the Philippines, lawmakers are considering legislation that would establish a national Bitcoin reserve, a bold proposal that signals just how seriously governments are beginning to view the asset. If passed, such initiatives could transform Bitcoin into a strategic financial resource at the national level, much like gold reserves in the traditional system. At the same time, not every institutional move is an expansion. Reports suggest that some asset managers have reduced their Bitcoin holdings in recent months, a reflection of portfolio rebalancing in response to both regulatory uncertainty and market volatility. These actions underscore that while institutional adoption is growing, it is not without challenges. Firms must navigate an evolving regulatory landscape that is still being defined, and decisions made today could set the tone for the next decade of Bitcoin's integration into traditional finance. Notable industry and cultural developments. Bitcoin's influence extends far beyond markets and regulations. It has become a global cultural and technological phenomenon. Sports teams, entertainment brands, and global corporations continue to engage in partnerships that bring Bitcoin closer to mainstream culture. These collaborations highlight Bitcoin not only as an investment asset, but also as a symbol of innovation and financial independence. One of the most debated topics surrounding Bitcoin today is its environmental impact. Bitcoin mining, which relies on powerful hardware solving complex cryptographic puzzles, has faced criticism for its energy consumption. In response, many mining operations are turning toward renewable energy solutions, from solar and wind power to hydroelectric resources. This transition not only addresses environmental concerns, but also strengthens Bitcoin's long-term sustainability. Prominent voices across finance and technology continue to weigh in on Bitcoin's future. From Wall Street executives to tech innovators, opinions vary but almost always acknowledge its disruptive power. Some describe Bitcoin as digital gold, a hedge against inflation and fiat currency devaluation. Others see it as the backbone of an entirely new financial system that prioritizes decentralization and transparency. Regardless of perspective, Bitcoin has succeeded in remaining a centerpiece of global discourse. Historical context. From origins to today. To fully appreciate Bitcoin's current standing, it's worth remembering how far it has come. Created in 2009 by the pseudonymous developer Satoshi Nakamoto, Bitcoin was originally a small-scale experiment in digital money. For years, it traded at pennies, with very few believers in its potential. The first major price surge came in 2013, when Bitcoin crossed the $1,000 mark, shocking financial observers. After cycles of boom and bust, Bitcoin reached new heights in 2017, peaking around $20,000 before crashing again. Many critics called it a bubble, yet Bitcoin survived and continued to grow. The latest cycles, including the institutional adoption in 2020 and beyond, have cemented Bitcoin's role as a mainstream financial asset. Unlike its early years, today, Bitcoin is no longer dismissed as a passing trend. Instead, it is studied by governments, accumulated by billion-dollar funds, and traded on Wall Street. This historical resilience is one of Bitcoin's defining features. Every crash has been followed by recovery, and every wave of doubt has eventually given way to renewed growth. That history informs why so many institutional players are willing to buy during downturns. They believe the long-term story remains intact. Summary: Bitcoin at a crossroads. Bitcoin today stands at a critical crossroads. On one side, short-term. Volatility and regulatory delays continue to challenge investor confidence. On the other, strong institutional accumulation, global adoption, cultural relevance, and the possibility of groundbreaking policy shifts all suggest a future of expansion and integration into the mainstream financial system. Whether it is through national reserves, sustainable mining practices, or Wall Street's embrace of Bitcoin ETFs, the cryptocurrency is proving that it is far more than a speculative trend. It is a financial revolution in motion, reshaping how value is stored, transferred, and perceived on a global scale. For investors, enthusiasts, and everyday observers, the message is clear. Bitcoin remains the asset to watch as it continues to influence markets, policy, and culture worldwide. This has been a comprehensive update on Bitcoin's current state, brought to you by Crypto On-Chain, your trusted source for in-depth insights into the cryptocurrency world.